All right, welcome back to this week's Breakout Watch List from August 14th to the 18th. In this video, I'll be covering the top 10 swing trading setups going into next week. Each of these stocks either have strong fundamentals, strong technicals, or volume clues that lead uptrends. And before we get started, this video is sponsored by MarketSmith, which is the trading research platform that we're going to be using to break down each of the setups. Here are the 10 stocks that I'll be covering in today's video. As you might notice, they are all from the long setup, but not many of them are tech. We've seen some distribution. The Nasdaq's under the 50-day moving average. Nvidia's under the 50-day moving average. A lot of semiconductors aren't participating much at all in this market. So we do want to be a little bit more cautious while we're trading as the market's pulling back. But these are some stocks that have been showing some great relative strength, are in some leading groups. And if we do see money flow back into the market, these are the names that I want to be focusing on. Now we'll jump to MarketSmith to go over the first setup. This is CEIX. This is in the energy coal group, 65th strongest out of 197 right now. I do want to go to a weekly chart because you could really see the power in this name from there. This had a rally from December of 2020, around $3.80, all the way up to $77 before basing out for over a year. We see like the first base here, second pullback undercuts the first one, really clearing out the names. And this had a really quality right side of the base where you see accumulation, very tight price action, and then we broke out with earnings on heavier than average volume last week. There's also another coal name, AMR, that's very similar from $2 up to $174, basing out. Looks like it's about to break to the upside of that base as well. So back to the daily chart for CEIX. This is one where it had that initial move on earnings, closed up 9.5% on basically double the average daily volume. Had continuation the next day into all-time highs before 2 days pulling back as the market was pulling back. Really tight price action, holding the HVC level on those pullbacks. So this is one where if the market continues to pull in, I will be looking right around that $80 or the HVC, the high volume close, which is $79.82 from that earnings day. This is one where even if it pulls back into the 8-day EMA, that's another area where if you look to the left of the chart, that's where previous resistance was. Now that we're pulling back above that, potential support right around 77.50. So if I do position myself around 80, I do want to give it a couple points under that 8-day moving average and those previous resistance highs for CEIX. Next, we have another earnings gap up. This is Celsius. That's the energy drink company that has been leading for most of this year and even last year. Really nice 2022, going into new highs. Not many stocks were doing that. It does tend to trade kind of wide and loose, which makes it really hard, as you can see, trading under the 50-day moving average for a lot of the time there. But since this gap up, we only pulled in the 21 EMA one time before very, very recently going into earnings where we had the 8, the 21, and the 50-day moving average all on top of each other. Since then, earnings per share gap up was up 20% on 400% the average daily volume, closed up in that daily range. Let's see what percent, 80th percentile. But what really stands out to me is this stock did not give anything back while the indexes were pulling back. You can see relative strength, not just that first day going up, but continuing on after that. Very similar setup to CEIX. If this pulls into the lows of the pullback around 170, that could be an area where you start to position yourself in. But I do want to kind of give myself the 8-day EMA as my stop loss. So ideally, the indexes pull back Monday, Tuesday. This pulls back along with it so we can get a lower entry around like 167, managing our risk against that 8-day EMA. But this is one great relative strength, very quality closing ranges over the last 3 days. Not one to take your eyes off of. That's Celsius. Next, we have CLS, and this is my favorite chart going into next week. Nice move on earnings, but didn't have that strong closing range as Celsius and CEIX did. Actually closed in the bottom 10th percentile of the daily range. But that next day, we actually had a gap up, rally, strong close, and had it on more volume than the previous day. And this was actually on the 28th of July, the highest volume in over a year. So you have that HVC, the close of that range at 2072. You can see it continued to rally for another day and then had this reversal bar, which typically leads to a pullback to the 8-day EMA, which we've been experiencing. Kind of a wild action on Wednesday last week, but then very, very tight action Thursday and Friday. So while the indexes were selling off, this was not giving up anything. And with the HVC at 2072, is that what I just said? Yeah, 2072. You could play this with a much larger position size, but very, very tight risk. just at that HVC level. Or what I would probably do here is look to enter with a break over Friday's high, 21.02, call it $21. Get half my stop loss under the HVC, and then also half my stop loss under the low of the pullback around, let's see, 2030, so call it 2024, something like that. But CLS, electronics, 49th strongest group out of 197. You have estimates increasing, strong earnings, strong reaction, really tight price action. So you're going to know right away if you're wrong or right on the name. Next, we have a biotech stock, CORT. This is another one. As you might see, the theme here is gap up on earnings, very strong action. This one up 25% on 770% the average daily volume. On a weekly chart, you can see that we're right at all-time highs, actually kind of trading right at that level right now. So blue skies ahead. Unless the monthly has something. Nope. Blue skies ahead. No one at this point is down money outside of like people who bought late on the first day here, but they're not down much. This is one where if it can pull back into that 8-day EMA or $30, allowing that 8-day to catch up to 30 on some market pressure, that would be a great place to manage risk against. And with these biotechs, they tend to trade just completely individual to the market. So when a biotech starts to show relative strength, it doesn't get me as excited as if a semiconductor was showing relative strength against the indexes. But biotechs are always, there's always going to be a couple biotechs setting up that you can trade regardless of the market. But I tend to size them down a little bit just because they do have gap down risk. But this is one that is acting really nicely above all the previous resistance. Let's see how it handles a pullback to 30 and that 8-day EMA, but one to keep on your watch list. Next, we have DO, the first of the oil and gas stocks on the list today. Oil and gas drilling, 81st out of 197. But just taking a look at XLE, the energy ETF, above all the key moving averages, coming in on new highs. XOP, oil and gas specifically, very, very clean uptrend here, above all the key moving averages. So energy, I was looking at breadth statistics before this. 90% of energy stocks in the S&P 500 are above their 5-day, are above their 20-day, are above their 50-day, and the 200-day. So that's really the area that's collecting all the money that's rotating out of tech and semiconductors. So that's the spot that I would like to be at. This is one that kind of had a choppy base here, really hard to get positioned before this run up. But then after this run, we had a big shakeout right before earnings, or right after. This is probably earnings day. Shook out the 50-day moving average. After doing so, closed right up in the 88th percentile of the daily range, just under the 8 and 21 EMAs. Some quiet action until Friday, up 4%, popping back through those moving averages with a nice wedge pop. This is one where if we could pull back early on in the day on Monday, right around $15, you could get positioned there. Stop loss under the 3 days lows, $14.50. Keep your risk manageable there. But this is a stock that has some whippy action, so if you do get stopped out, for me, I'm trying to size this a little bit smaller and then try to build into it, because if this is a theme, energy, oil, and gas is the next theme in the market, I want to be a little bit more patient. So that, for me, is smaller position sizing at first and then really try to build into whatever the leading stocks in the group are. So that's DO. Now, we do have one tech stock on the list today. This is INFA. I put this on the list because very similar to the others. Big earnings gap. Earnings was only up 6% year over year. Sales up 1%. Nothing incredible there. But price and volume spoke. We had 445% the average daily volume. Price was up 16%, over $20, over this previous resistance. And we had some continuation, one day up another 1% before pulling back through the 8-day EMA. But really what I want to point out is as the indexes really deteriorated the rest of the week, on Wednesday we pulled back. The low of the day was 2014. The low of the day on Thursday, 2006. The low of the day on Friday, 2002. So far, this $20 level has been being respected. So the fact that the indexes can sell off, NVIDIA can break down, and this isn't giving up that 20 spot, while volatility is tightening up with slightly lower lows, but much lower highs, really tight price action here. Similar to CLS earlier that we talked about, you're going to know right away if you're right or wrong on this name. So you can size it up a little bit larger, keep your risk very tight, and if you're wrong right away and wrong for a small amount here. So I'm looking for a break back over the 8-day EMA, over the high of Friday, 2035, and get my stop loss under $20 on this one. Now we go to the second oil and gas name. This is NE, also oil and gas drilling. Also kind of choppy through the base here, but once it got going, it really exploded on above average volume. Coming up here, had that shakeout similar to DO on Tuesday of last week, but we closed Friday right at the high of the day. Very, very strong action. This is one where if we open lower and then take out the high from Friday, 53.50, that's a potential entry point if we're trying to trade this as a momentum trade. Otherwise, just keep this on your watch list. Set some alerts a little bit lower for that 21 EMA to catch up to like 51, 51.30, where some of these low of days are. That would be a really great spot to monitor a pullback, set alerts around there. And then if you start to see some U-turning action right at the 21 EMA, you can get position and get your stop loss under $50. That's a 2 to 3% stop, something that you could size up a little bit more for NE. Next, we have POWL. This is an electrical power equipment, 27th strongest group out of 197. So we do have that group strength behind us. Take a look at these fundamentals. Very, very strong. Earnings over 1,000% growth. Sales up 42%. After-tax profit margin up 10%. That reaction, or those earnings caused a 40% move on 800% the average daily volume. As the market pulls back, it pulls back as well, but hasn't even touched the 8-day EMA yet. Even on Friday's low, it was slightly above that, but really orderly pullback and holding that area. Estimates for the rest of 2023 and 2024 have increased, so that's nice to see. And we're seeing fund ownership increase in the name as well, 265, 267, 296 in June. So a serial gapper. When we look to the left of the chart, we see on December 6th a gap up. We see a gap up on May 3rd. And it's a gap and rally, gap and rally. So after some pullback, as the indexes pull back, we see another big gap. I'm looking for the same thing. If we can, if we open lower and then take out 80, then my stop's just under the low, 76.80. Otherwise, taking out the high from Friday and Thursday, right around the same price, 81.75. That I would probably size a little bit lower just because it's a wider stop and the market environment hasn't been super strong for POWL. I got 2 more stocks for you, so if you guys are enjoying the video, please do me a huge favor and leave a like and subscribe to my channel. I make this breakout watch list video every week along with other trading related videos. This next stock is another oil and gas stock, SLB. I think I had it on last week. I think I had it on the week before. As it continues to kind of churn higher, I haven't found a way into the name. Had a nice shakeout, like all those oil and gas names on Tuesday. Very strong closing range. Maybe just buying on Tuesday of last week as it kind of came back through the 8-day EMA would have been your spot to get in. I did not do that. I don't have a position in this just yet. But I do like the shakeout that all those oil and gas names went through and then really strong price action. This very clean pivot right at $60. I want to go to a weekly chart to see if that's an all-time high. Not an all-time high, but many, many, many years ago. Overhead resistance from multiple years ago doesn't mean as much as recent overhead resistance. So a break over $60 for SLB is the area that I'm watching. And then just a stop under the 8-day EMA, $58. It's about slightly under a 4% risk there. And the last stock that I have for you is Upwork, UPWK. Another earnings gap up. This one was up 44% on 935% the average daily volume. Closed right at the high of the day, 94th percentile. And even though the market was really pulling back the next day, it tried to rally up 2.9%. At one point, this was up, I want to say 7.5%. I was kind of kicking myself for not getting in on this day, but the market backdrop was so ugly. I didn't want to put any new positions on. And eventually it did kind of come back, pulled in. We haven't even tested the 8-day EMA. This is really tight price action. Let me go to a 30-minute chart on this. You see that big gap up, came into 12.5, probably undercut it. No, low was like 12.5 exactly. Nice to see a round number being supported there. From there, we had that day 2 action and just really tight price action. While the index kept making lower lows, lower lows, lower lows, this is putting in higher low, higher low, higher low. Really tight price action. Pivot at 1450. Stop under 14, call it 1391. That's the trade that I'll be watching for Upwork. And that's going to be the breakout watch list for the upcoming week. I hope you guys enjoyed the video, and I'll see you in the next one.